Okay, let's go.
What if I told you that one of the greatest traders who ever lived made a fortune that would be worth over $10 billion today, and he did it using a system he came up with centuries before we even had computers? Sounds kind of nuts, right? But it's absolutely true. Let's get into it. Yep, you're seeing that right. $10 billion. That's the estimated fortune of an 18th century Japanese rice trader named Munehisa Homma. The guy was such a legend, they called him the god of the markets. And honestly, the methods he developed are just as deadly effective today as they were back then. So the big question is, how on earth did he pull it off? How did he seem to read the market's mind with such insane accuracy? Well, in this explainer, we're going to pull back the curtain and unlock the exact timeless system that he created. Okay, so it all starts with the most fundamental building block of his entire system, a single, humble candlestick. Now, at first glance, a candlestick might just look like a simple little bar, but trust me, it's absolutely packed with information. It tells us four crucial things: where the price opened, where it closed, the highest point it reached, and the lowest. The fat part, that's called the body, and it shows the distance between the open and the close. Those little lines sticking out, the wicks, they show the extremes, the absolute high and low. Green means the buyers won that round. Red means the sellers were in charge. It's simple, but it's incredibly powerful. But here's the real key, the thing Homma understood. He didn't just see data points, he saw a story. Every single candle was like a bulletin from the front lines of a battle, a real-time report telling him who was winning, who was losing, and who was about to take control. All right, now that we've got the basics down, let's look at how different candles are like different words that the market uses to tell us exactly how it's feeling. So the first and maybe the most powerful word you can learn is the marubozu. It literally means shaved head. And you can see why. This candle has no wicks at all, just a big, full, solid body. This isn't a whisper from the market. This is a full-on shout. It screams pure, unshakable conviction and total dominance. And you don't have to take my word for it. Homma himself put it perfectly. He said that a candle with no shadow, no wick, means the market has zero doubt about where it's going. It means either the buyers or the sellers are in complete, total control. There is no hesitation. Now, on the complete opposite end of the spectrum, we've got the doji. This is a candle where the opening and closing price are pretty much the exact same. Homma saw this as the market just taking a breath. It's a moment of perfect equilibrium where neither the buyers nor the sellers can get the upper hand. It's the ultimate sign of indecision. I mean, look at the difference here. It couldn't be more clear. The Murabozu is all about certainty and pure momentum. The doji is all about doubt and pause. Just being able to spot the difference between these two is a massive first step to understanding what the market is actually trying to tell you. Next up are the candles that scream rejection. The tankachi, or hammer, shows up after prices have been falling. That super long lower wick tells a story. The sellers tried to shove the price way down, but then bam! The buyers charged in and aggressively rejected those low prices. The nagarebashi, or shooting star, is the exact opposite. It's sellers rejecting higher prices after a rally. And again, Homma's description is just poetic, but so on point. He saw that long lower shadow not just as some data point, but as the market literally saying, nope, we're done going down. He knew that meant the selling pressure was probably exhausted. Okay, so now we have the words, the individual candles. Let's see how Homma put them together to form sentences and paragraphs. He built a whole system around 5 core patterns, which he called the laws of the market. And this is it, the Sakata 5 method. It's basically a complete playbook for reading the market's entire life cycle. Each of these 5 patterns tells a critical part of the story. For instance, the 3 mountains and 3 rivers are these huge reversal signals that tell you a trend is probably out of gas. 3 soldiers, on the other hand, is a powerful confirmation that a strong trend has legs and is likely to keep running. This was Homma's genius, organizing these candle words into a clear story so he could see what was coming next. All right, now this is where things get really, really cool. We're going to see how you can take this ancient wisdom and basically put it on steroids using modern trading ideas. So let's take Homma's 3 rivers pattern. Today, you'd probably call it a triple bottom. What this pattern is telling us is that the sellers have tried on 3 separate occasions to push the price lower, and they have failed every single time. They are tired. They're exhausted. So a modern trader sees that and thinks, Okay, I'm gonna wait for the liquidity sweep. What's that? It's a quick, nasty little move where the price dips just below those three previous lows. Now, this is often a deliberate trap set by big institutions. They do it to trigger all the stop loss orders from smaller traders, creating a big pool of liquidity they can use to jump into their own huge positions at a great price. It's a classic smart money move. So here's how you combine the two into a killer strategy. Step 1, you identify Homma's three rivers pattern. Step 2, you patiently wait for that modern liquidity sweep to happen. And then, for step 3, the confirmation, you look for a massive, powerful, engulfing candle where the buyers just come in and completely take over. This is where ancient wisdom meets modern day precision, and it creates an incredibly high probability setup. So we've looked at the candles, the patterns, we've even built a modern strategy. But what is the single biggest secret behind all of this? What's the one thing that ties it all together? I'll tell you what it's not. It's not about memorizing 50 different Japanese names for patterns. I mean, anyone can do that with a cheat sheet. That's not where the real power is. The true secret, the thing that Homma understood down to his bones, is about recognizing the one constant, powerful force that drives every single market in every single country in every single era. So after all of this, what is it that these charts, these patterns, these little candles, what are they really showing us? It's human emotion, plain and simple. It's greed, it's fear, it's hope, it's panic, it's conviction, it's doubt. That's what moves prices. Homma's true genius wasn't just in spotting patterns, it was seeing the raw, collective human psychology playing out right in front of him in real time. And that, my friends, is a secret that will never, ever go out of style.